I sure hope you guys are ready for a big week in the stock market, because that's exactly what it's going to be. It's going to be a massive week this week, coming off of a very rocky, volatile week last week. I mean, last Friday we had a crazy day. We had the S&P go down 1.1%. The Russell went down 2.4%. The NASDAQ went down 0.5%, as the Dow went down over 1.1%. We had the VIX up almost 11%. The metals were going crazy. So yeah, we're going to have a pretty interesting week this week. We have a lot of companies to break down. We have earnings coming up. We have the FOMC statement, the press conference, interest rates. Are we going to get a hike? Are we going to stay the same? We have a lot to break down in this video. So if y'all find value, hit the like button. Make sure to subscribe. And don't forget to get up to 17 stocks for Moomoo using that link down below. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get another 4 free shares of stock plus 2 shares of either AI or BBAI. And get this, if you deposit at least $1,000, you get another 10 stocks, totaling 17 free stocks. So if you want some free stocks, you want to help out the channel as well, use that Moomoo link down below. And with that being said, let's dive into the video. So we can see here, like I said, the markets have been very rocky, especially the past couple of weeks, but especially this past week. If you guys look here on the 5-day, 5-minute on SPY, we were all over the place last week, from 385 to 395, back down to 388 on Friday. You guys can see the choppiness here. And if we pull up the 20-day chart, man, oh man, you're going to see the choppiness here as well. We could see overall the downtrend is still intact on the 20-day chart, not only on SPY, but also on Triple Q. You guys can see that. Well, actually, Triple Q is a little bit different on the 20-day chart. It does actually show some signs of more upside, because it is breaking out of the highs from the past couple of days and from earlier in March. But guys, if you pull the 4-hour on Triple Q, that's where you're going to notice we're still in a downtrend. You guys can see right here, we're going to be testing a very pivotal spot this upcoming week. Right here, right at about 305, 307, that's going to be a big spot. If we do end up pushing through that, if Triple Q breaks out, like I said last week, above 310, we start moving 315 past that point, that's going to be a spot where, okay, we might get a legitimate reversal for the bulls, but we're not there yet. Don't get too excited quite yet on Triple Q here on the 4-hour chart. And SPY, if I pull it up, you're going to see it is still clearly in a downtrend on the 4-hour chart, on the 20-day chart as well, like I showed you all. And we have a clear head and shoulders here that has formed, that we did, not to toot my own horn, but we did call this out about a week, 2 weeks ago, before it actually played out, and it's still intact. So that means we might get even more downside here on that right shoulder. So in my eyes, guys, the bulls are nowhere to be found on SPY. They're kind of creeping back a little bit on Triple Q, but still, like I said, on the 4-hour chart on Triple Q, we're still at a pretty big resistance. There has to be. The bulls need to see a push past 310, 315. We'll see if that happens. If it does, great. If it doesn't, we might see more downside on Triple Q. So this Wednesday, guys, we have the good old FOMC statement, the press conference, which we're going to see Q&A with Jerome Powell. We're going to see where his head's at with the jobs market, inflation, interest rates, what his future plans are with the Federal Reserve in terms of raising rates, keeping them the same. This is going to be a very big week for that. That's probably the biggest thing coming up this week, the biggest event, because we have the Fed funds rate right now. I think it's at 4 3/4. What's it at? 4.75. We're expecting, what's priced in right now is a 25 basis point rate hike, which is going to push the Fed funds rate up to 5%. Isn't it crazy? I mean, a year or 2 years ago, the Fed funds rate was at 0, pushing 0, right? I mean, it's crazy how fast things could turn, and we're noticing as interest rates are going up, well, a lot of these banks, they can't handle it. They're going under. The regional banks that had all these bonds that were bought at low interest rates, now they're losing a bunch of money on those bonds, right? They're having to sell those bonds at a loss, raise money from other banks, from the government, stuff like that. This is really crazy times. These are crazy times that we're currently living in. So Wednesday, expect a 25 basis point rate hike from the Federal Reserve, which is priced in. We all kind of expect that coming from the Federal Reserve. Now, if they come in at 50 or 75, which I doubt, I mean, there's no way they're doing 75. But if they come in at 50, that might shock the markets a little bit. That might shock the markets more than just a little bit. We'll see how it goes. What do you guys think? Let me know your thoughts down below in the comments. But that's kind of a quick rundown on what the markets look like right now. Again, very choppy heading into this week. And what the main thing I'm looking at is, which again is the FOMC statement for this upcoming week, which you guys better be looking at that as well. And with that being said, guys, let's break down some stocks. A couple companies here that are reporting earnings this week. And let me just say this. Let me preface it with this. These aren't the most exciting companies. I mean, some of them, I guess you can say, are exciting, but they're kind of boring. Some of these companies are boring, but still, we're going to break down what companies I'm looking at this week when it comes to earnings. The first company is Foot Locker, ticker symbol FL. Let's pull up this stock and take a look at what's going on, which you guys probably have heard me talk about this stock time and time again because, well, the chart looks pretty decent. And I have been talking about this stock a little bit here recently in the recent past couple of weeks, right? Because, again, the chart looks good and we're now in a wedge. You guys can see we're in this wedge where we're making higher lows, lower highs, all that good stuff. And as of Friday, we went down a little bit, about 1%, but on Thursday, I think, or was it Wednesday, Thursday, either way, we had a nice rally on Foot Locker that got us to the top of the wedge. We got rejected there again, and now we're retesting it, and we're probably going to be retesting it at some point this week, Monday, Tuesday, Wednesday, heading into earnings. Well, actually, earnings are on Monday, so we're going to see what this does tomorrow morning, actually. Yeah, tomorrow morning they report, Monday morning, so keep your eyes out on Foot Locker there. If we do start breaking out of 45, we start breaking the wedge, like I've been saying on this channel time and time again, there could be a massive leg up coming on Foot Locker. But of course, it could go either way at this point. But I am leaning more towards the upside here on Foot Locker, depending on how the earnings look. I mean, we'll see. They're looking to do EPS of 51 cents on revenue of $2.15 billion, a little bit more than $2, guys, which would be down 8.3%. So you guys know, and that's year over year, by the way, and you guys know, I'm not a big earnings trader. I'm not going to be buying a bunch of shares or options before earnings, gambling on what the stock's going to do. So I'm going to wait and see in the pre-market what Foot Locker reports, what their guidance looks like. Heck, I might even tune in to the earnings call, and we'll see what ends up happening in this wedge. Do we break out of 45, break out of 43, or do we start dumping under 40, which, of course, would not be good for the bull? So stock number one that I'm looking at is Foot Locker for this week. And again, they're reporting earnings tomorrow morning, Monday morning. That's the 20th of March. The next company that I'm looking at, which is probably the most exciting out of all these that we're going to talk about today, guys, is Nike, ticker symbol NKE. They're reporting earnings on the 21st, which is, of course, the day after the 20th. That is on, what is that, Tuesday? Yeah, that's on Tuesday, guys. They're reporting after the bell. Let me make sure, though. Yeah, after the bell on Tuesday. They're looking to do 55 cents in EPS. Okay, nice, profitable quarter, which I'm not surprised that they're profitable. It's Nike, guys. And they're looking to do revenue of $11.46 billion, which would be up 5.4% year over year. And let me say this right now. All these numbers we're talking about here, these are all estimates. We don't know exactly what the numbers are until the numbers actually come out. So keep in mind, that's an estimate, but they're looking to do grow 5.4% on revenue. Again, revenue is looking to come in at $11.46 billion. So Nike's looking interesting, the chart that is. If we zoom in a little bit here, we're going to notice a bit of a head and shoulders forming. You guys might see it, maybe not. Let me draw it out so you guys can see it, right? You guys see that left shoulder head, right shoulder, and the past couple of weeks, pretty much all of March, even in early February, you guys can see we've been downtrending, right? We've been making these lower highs, prominent lower highs, 130, right, 127, and now we're technically at another one at 121, 123, right around here. So this is going to be a sticking point for the stock, no doubt about it. We're going to be seeing probably some selling pressure here, a lot of resistance this upcoming week at this point right here. But if this does break out, not only are we breaking out of the downtrend, but we're also going to be breaking out of the neckline of that head and shoulders that we just talked about, right? Which the neckline is right around, I'd argue, 125, something like that. So if we start moving out of that point, guys, that could be a legitimate breakout spot for Nike, and we have a bunch of gaps to the upside to fill. We're talking up to maybe 127 initially. Let me draw that out. If that were to break, maybe we start gunning for $130 a share. That's where this could be going. So Nike, probably the most exciting one to look at, but don't get too excited yet until it starts to break out of the downtrend, which we don't know if that's going to happen, when that's going to happen. time will tell, guys. That's Nike, ticker symbol NKE. Now, the next one is also maybe a little bit exciting. It kind of is. GameStop, guys, ticker symbol GME. GameStop, you guys know, has not been doing well. It's been downtrending for months, and sure, we've seen little rallies here and there, but overall, I mean, there's no doubt about it. It doesn't take a rocket scientist to tell you this thing's been downtrending since August. You guys can see here where back in August, it was at $45 a share. Now it's at $16 a share. It is down about 65% from that point, and again, we've seen little rallies, but it's in a downtrend, and right now, we're actually approaching the lows from the beginning of this year, which those lows were right around $15, $16. You can see the lows right here. So by the looks of it, guys, we have a head and shoulders here that played out. We're right at the lows from the beginning of this year. If I had to guess, unless earnings are fantastic, which I don't know, I kind of doubt that. This company doesn't move on earnings, guys. You know that. Unless earnings are fantastic, this is probably going to take out the lows. That's my opinion. You know, I think that's where it's trending. Clearly, the chart shows that. We have a death cross. We're under the moving averages. This looks like it wants to take out the lows, being 15, 16 bucks. And the question is, if they do take out the lows, if GameStop takes the lows out, where is it going to be going from that point? Well, let's pull up the 3-year chart to answer that question. If I zoom in a little bit here, guys, I mean, $10, I'm not sure if you guys can see, that was the low from back in the beginning of 2021, roughly February of 2021. If you all remember what happened back then, we had that initial crazy run on GameStop to $120, then it pulled back to about $2 again in 2021, early 21, a couple, single dollar per share. And then it had another rally to $87. Then it's been dying off ever since then, ever so slightly, with little rallies, in between, quote unquote little. Some of these were 50, 60%, which is way more than little, but you guys get the point. So at this point, guys, if we fall under 15, we have a wide open gap down to $10. Then if $10 breaks, man, single digits, we're going to be coming on, that's where GameStop is probably going to be going. So they're reporting on the 21st. They're looking to do EPS of negative 13 cents, so they're going to lose money, and they're going to be doing revenue of $2.18 billion, which would be down over 3%. Year over year. Not too bad, but still, they're going to be down 3% year over year. So watch out for GameStop. I'm also watching Chewy very, very closely this week, guys, as Chewy's chart does not look that bad. We do have resistance at about $50. You guys see that right here. Let me draw it out. But at the same time, we have been making higher lows for quite some time, for months. You guys see it right here. Higher low, higher low, higher low, higher low. Now we are starting to see a little bit of a pop as of last week, not really. But if it starts to break out of this 20-day chart, you guys see this downtrend. If we start breaking out of, let's say, $40, $42, move into the mid-40s, that's where we could get that confirmation for more upside on Chewy stock. So my alert's at $43, which I'll keep it there. Maybe I'll put another one at $40. Let me do that now. Mark is at or above $40 a share. Let me set that right now. There we go. And if we do start to move out of that point, guys, 40, 43, then you can make a serious case that this could be getting ready to start to move even higher, maybe towards the mid-high 40s, maybe towards that $50 level again. So Chewy's looking to do, let's see here, EPS of negative 11 cents, so they're going to lose money on revenue of $2.64 billion, which would be up almost 11% year over year. Not too bad. And they're looking to report on the 22nd, which is, I believe, on Wednesday. Yeah, Wednesday, probably after the bell. Let me see here when they're going to be reporting. Yeah, Wednesday after the bell. That's the 22nd of March. So my alerts again are at $40, $43 here on Chewy, ticker symbol CHWY. Let's see what that does. And we also have General Mills this week, ticker symbol GIS. Not the most exciting company, but the chart does not look that bad. We can see it's fighting to hold an uptrend here. We're actually moving slightly above the moving averages as of last week, which is great. And what do we have right here, guys? Not the most clean looking inverse head and shoulders, but nonetheless, it is an inverse head and shoulders. You guys see the left shoulder right here, boom. We got the head right here, boom, right? You guys see that? Let me actually draw it out if it wants to let me do it. Come on. Then we have the right shoulder right here that you guys are seeing, and we're now starting to potentially break out of these moving averages. Well, we are above the moving averages, but we're not yet above the highs from the end of February, early March, which were right around 80 to 81 bucks. Now, if we do break 80 to 81, that's where General Mills could really start to gain momentum. That right shoulder could complete, and we could start running towards mid-80s, high 80s. And you could also argue here we have a cup and handle on General Mills. You got the cup, you got the handle. Now let's see if we could break 81, 82. So that's what it comes down to, guys. Are we going to break out of $82? That's what I'm looking out for. So I'm going to set my alert markers that we're above 82. They're looking to do 92 cents of EPS on the 22nd or 3rd. They're on Thursday, guys. 23rd of this month. So they're looking to do 92 cents EPS on revenue of almost $5 billion, which would be up around 9% year over year. Not too bad. So before we talk about the last stock in the video, don't forget to get your free stocks. What are you doing? If you haven't gone up to 17 stocks yet from Moomoo, use that link down below or go to stocksurfest.com/Moomoo. Once you open up an account, you get 1 free share of stock. Once you deposit at least $100, you get another 6 free shares of stock, which 2 of those are either ticker symbol AI or BBAI, which is limited time, by the way. Get those free stocks. And if you deposit at least $1,000, get ready for this, guys. You get another 10 free shares of stock, totaling 17 free shares. And the beautiful thing is, guys, if you don't like Moomoo, which I think you will like Moomoo, but if you don't like the platform, you can just deposit your money, get your free stocks, and then you could just withdraw all of your money, keep the free stocks. No strings attached, guys. So if you want to help out the channel and you want some free money, use that Moomoo link down below. And with that being said, let's talk about the last stock, which is Darden Restaurants. Let's pull it up. They're reporting, I think, later in the week on Thursday as well. Same with General Mills. They're looking to do EPS of $2.23 on revenue of $2.73 billion, which would be up almost 12% year over year. So a lot of these companies, guys, except for Foot Locker and GameStop, they're going to be growing revenues pretty decently year over year. And we're noticing here, Darden Restaurants, the setup is actually pretty bullish. You guys can see here, especially if I zoom in a little bit, if it lets me do it, there we go. It's being a little bit glitchy today, guys. ThinkOrSwim is. If we look here, we have an ascending triangle on Darden Restaurants. We have clear resistance at 150. We've been making these higher lows into 150. Now we're pretty much testing it. We closed a little bit under it on Friday. We went down 1.2%. So is Darden Restaurants going to retake 150? Is it going to break out of that point into the mid 150s, maybe even higher? That's the $1 million question. And the way that the stock chart looks, the way we're setting up here, granted, if the earnings are horrible, this could go out the window. But the way things are setting up right now, I'm leaning more towards a breakout. That's the way I'm looking at it. So I'm going to set my alert at 150. Maybe we'll put it at 152. Let's do that now. Mark is at or above, and we'll see where it goes from that point. So with that being said, guys, I'm going to wrap up the video. Those are a bunch of stocks I'm looking at, and I actually made a video earlier today on SoFi. Go check that out if you haven't done so already. And if you haven't checked out my Patreon yet, and you like the way I break down charts, you like the way I talk about stocks, the Patreon is going to be a great place for you. Not only do you get my charts throughout the day, my thoughts throughout the day, you also get one-on-one access to me. You get access to my Patreon portfolio, which I'm starting from scratch. I started this about a month ago, maybe over a month ago at this point, and we've been building that exclusively for the Patreon members. If you want to be a part of the Discord as well, all of that is linked down below on Patreon. And don't forget to get up to 17 stocks from Moomoo, which you already heard about. Those are linked down below. And with that being said, I'll catch you guys later. Peace out.